So, you know how you sometimes get a general sense about a country's economy? Like Australia's often feels stable,
Yeah.
maybe a little uh, concentrated.
Yeah, that's a common perception.
Well, today we're plunging into an analysis that argues it's more than just concentrated. It's fundamentally, well, oligopolistic.
Exactly.
Our mission, really, is to understand what that term actually means in the Australian context. And crucially, what are the implications if you're trying to make sense of the economic landscape here?
Right. And we're looking at a pretty data-rich piece that makes a compelling case.
Okay.
And the central point, I think, is that this isn't just about a few big companies doing well. Across several key industries, a very small number of powerful players have significant control.
And that control has effects.
Oh, absolutely. Far-reaching effects on competition, innovation, the overall energy of the economy, really.
Okay, let's get right into this oligopoly idea then.
Right.
What does that actually look like on the ground for, everyday people?
Well, simply put, an oligopoly is just a market dominated by a few large companies. Think of it as somewhere between a monopoly, just one player, and a really competitive market with loads of different options. This analysis suggests Australia has quite a few of these oligopolistic situations.
Right, and the analysis backs this up with some hard numbers, yeah. Let's start with something we all deal with. Supermarkets, Woolworths and Kohl's, what's their slice of the pie?
A big slice. Current data, this is from 2024, indicates they hold around 65 to 70% of the combined supermarket market share.
Wow, 65 to 70%.
Yeah. Now think about your own grocery shopping, right? You've essentially got two main choices for where you spend a big chunk of your weekly budget.
Hmm.
What does that actually mean for the prices you see, the range of products available? Could smaller players realistically offer something drastically different and actually compete?
Yeah, it definitely makes you wonder if there's as much pressure on them, to keep prices super low or bring out genuinely new stuff compared to a market with, say, 10 competitors.
Exactly.
What about banking? That always feels like a realm of giants.
Yeah. Absolutely. And the numbers confirm it. Reserve Bank of Australia figures from 2023 show that the Big Four, CBA, NAB, ANZ, and Westpac, they control approximately 83% of the mortgage market.
83%.
Yeah, so when just four institutions hold such a dominant position in something as vital as home loans, well, it naturally raises questions.
Right.
Like, how high are the barriers for new financial institutions trying to get in? Can they offer genuinely competitive alternatives? It makes you consider if the incentive to, say, aggressively innovate or offer significantly better deals is as strong as it could be.
Right. Telecoms is another one. You instantly think of Telstra, Optus, PPG.
And you'd be right. According to the ACCC's 2022 data, those three companies account for about 88% of the mobile market.
88%. So again, very concentrated.
Very. So while we might see flashy marketing campaigns trying to grab our attention, the underlying infrastructure, the major players, they remain largely the same.
So what's the long-term impact? Does it affect quality, pricing of our internet mobile services?
Well, you'd hope for constant upgrades and really competitive pricing, wouldn't you? But with so few major options, maybe that competitive edge isn't quite as sharp as it could be.
Media is another interesting one. News Corp and Nine.
The analysis points to them having around 85% of newspaper readership combined in 2023.
Okay, 85%.
So when such a large proportion of news consumption is concentrated like that, it naturally raises concerns, about the diversity of perspectives available, the potential for a limited range of viewpoints shaping public discussion.
It certainly makes you think twice about where you're getting your information from.
Yeah.
Yeah. And finally, in this sort of sector snapshot, let's look at airlines, Qantas, and Virgin.
Data from B2E in 2023 suggests they handle roughly 90% of domestic flights.
90%.
Yep. So for those of us who fly regularly or even occasionally, this can mean fewer choices in flight times, potentially higher fares,
Right.
and perhaps less pressure on service quality when there just aren't many other viable options for getting around the country.
So, okay, across all these key areas, supermarkets, banks, telcos, media, airlines, we see this recurring theme. High concentration, which could mean high prices, maybe not huge differences in service.
Yeah.
And it sounds incredibly challenging for new businesses to even get a foothold. It's like, I don't know, trying to launch a new soft drink when Coke and Pepsi dominate every single shelf space.
That's a great analogy. That's exactly the kind of challenge. It's like that small swimming pool we talked about. But now picture those few large swimmers actively creating waves, making it even harder for anyone smaller just to stay afloat.
Right.
This lack of really intense competitive pressure, it can slow down innovation. It can keep prices at a level that might not exist in a more dynamic, more crowded market.
Now, the analysis also highlights Australia's relatively small population and market size as a factor here, which seems logical, but let's dig into that a bit more.
Sure. So Australia's population is around, 26.9 million estimated for 2025,
Okay.
which, as the analysis points out, is actually less than the population of Texas in the U.S.
Wow, less than Texas. That really puts it in perspective.
It does. And while our global GDP ranking is respectable, like number 13 globally, we only represent about 0.3% of the global population. It's a very small slice of the world's consumers.
And the fact that most of us, over 60%, live in just 5 major cities: Sydney, Melbourne, Brisbane, Perth, Adelaide. That must also influence things, right? How businesses operate nationally.
It definitely does. On one hand, it creates concentrated areas of demand, which can make distribution easier in some ways. But on the other hand, it can make reaching a truly national market more complex and costly, especially for smaller businesses that might not have the infrastructure or, the marketing reach of the larger players.
And for international companies looking in.
Well, Australia's smaller consumer base might not offer the same potential returns as larger markets like the US or Europe. That could deter them from investing heavily here or entering at all.
Right.
And similarly, domestic businesses might find their growth ambitions kind of capped by the size of the local market.
So it's a smaller pie to begin with, which might naturally lead to fewer dominant players just because of scale. But the analysis also points to a significant regulatory and compliance burden. How does that complicate things?
Yeah, this is a big one. The analysis really underscores the complexity here. For example, it mentions there are over 100 different industry-specific labor awards. That's a lot to navigate.
That's 100. Wow.
Yeah. And when you look at global rankings for ease of doing business, specifically around regulation, Australia comes in at 80th, according to the 2024 Heritage Foundation Index.
80th. That doesn't sound great.
It suggests it's relatively complex compared to many other places, and this complexity, the associated costs, it can disproportionately hit smaller businesses and new entrants.
How so?
While they might not have dedicated compliance teams or the resources, frankly, to navigate this landscape as effectively as a huge corporation can.
And the example of banking regulation making it tough for neobanks, the new digital banks, that's quite telling, isn't it? We saw some, like Volt Bank, having to shut down by 2022.
That's a prime illustration, yes. The regulatory hurdles, plus the sheer amount of capital required in banking, are substantial. It effectively creates a very high barrier to entry.
Which protects the established players.
It certainly helps protect the established Big Four from significant disruption by these newer, often more agile, tech-focused players.
Yeah.
Now, some argue this is crucial for financial stability, and that's a valid point.
Sure.
But it also undeniably reduces competition and the diversity of financial products available to consumers. And it's not hard to see how these regulations might be less of a hurdle for, a massive established institution.
So it's almost like the rules of the game, maybe inadvertently, end up favoring the existing giants.
That's one interpretation the analysis puts forward.
And the analysis also touches on other entry barriers, right?
Yeah.
And even government support that benefits these incumbents.
Exactly. Think about the sheer upfront costs in sectors like telco, banking, aviation. We're talking hundreds of millions of dollars in investment needed. That alone is a massive deterrent for most startups.
For sure.
Then add things like the implicit government guarantees for the Big Four banks. While that's aimed at ensuring financial stability, it can also create a perception of lower risk for these institutions.
How did that affect competition?
It might influence their borrowing costs, potentially making it even harder for smaller competitors to offer equally competitive rates. And let's not forget the often lengthy, complex regulatory approval processes that new businesses in various sectors face.
Right.
You put all these factors together, high capital costs, regulatory complexity, implicit support, long approval times, and it creates a significant disadvantage for new entrants. It reinforces the dominance of the existing large companies.
It really sounds like the playing field isn't exactly level. Now, shifting gears slightly, the Australian economy is so often linked with mining and natural resources. How does our heavy reliance on just a few export sectors factor into this whole competitiveness discussion?
This is a critical point in the analysis. It highlights that mining makes up a huge chunk, 71% of our goods exports, primarily iron ore, coal, and liquefied natural gas.
71%. That's massive.
It is. And while these sectors are undeniably massive contributors to our national income, This concentration also makes our economy quite vulnerable.
Vulnerable how?
Vulnerable to fluctuations in global commodity prices. If the price of iron ore drops significantly, it has a big impact. We also saw how quickly other major export earners like education and tourism could be hit by global events. Think about the pandemic.
Oh yeah, that was huge.
A massive hit, the analysis mentions a $37 billion impact. Meanwhile, manufacturing's contribution to GDP has been steadily declining. It was around 12% back in 1990. Now it's down to just 5.5% in 2023.
So we're heavily reliant on digging stuff up and selling it, basically.
Right.
While sectors that could potentially drive more innovation and long-term diversification are shrinking in relative importance.
Precisely. That's the concern raised. This reliance on a narrow base of export industries can perhaps reduce the urgency and the incentive to really invest in and develop other sectors.
Like tech, advanced manufacturing.
Exactly, those knowledge-based industries. When commodity prices are high, there can be less perceived need to diversify and foster innovation elsewhere. It's kind of like, why bother when the money's rolling in from resources?
Which brings us neatly to the next point in the analysis, a potentially weak innovation ecosystem.
Yeah.
That feels like a really crucial piece of this puzzle, doesn't it?
It really is. The analysis points out that Australia's investment in research and development, R&D, as a percentage of GDP, it's noticeably lower than the OECD average.
How much lower?
About 1.68% for Australia, compared to an OECD average of 2.68%. And our venture capital investment, the money available for startups while it's growing, it's dwarfed by other places.
Like the U.S.?
Yeah, the comparison used is $3.1 billion here versus $190 billion in the U.S. in 2023. Huge difference. And our global innovation ranking, while not terrible at 24th according to WIPO in 2024, certainly suggests there's room for significant improvement.
So less money going into R&D, less funding for startups. What are the practical consequences of this? What does it mean on the ground?
Well, it likely translates to fewer successful Australian startups scaling up to become really significant players, especially on the global stage. We also potentially see a brain drain, talented researchers, entrepreneurs, maybe seeking more fertile ground in countries with more robust innovation ecosystems, more funding opportunities.
Right. You hear stories about that.
You do. And ultimately, this can reduce our long-term competitiveness in those future-oriented sectors that are expected to drive global growth and create high-value jobs down the track.
Okay. Finally, the analysis touches on Australia's relatively high cost base and how that impacts our ability to compete globally. This is something you hear about quite a lot, actually.
Indeed. It's a well-known challenge. Australia has a relatively high average salary compared to many other developed nations. The OECD data for 2024 puts it around AU $94,000.
Which is great for workers, but maybe tough for businesses competing internationally.
It can be. Plus, we've seen significant increases in electricity prices for businesses in recent years. The analysis cites a 35% jump year-on-year between 2022 and 2023 from the AEMC.
Ouch.
And then there's geography. Being an island nation far from major markets, it means our import and export costs are considerably higher than the global average. The analysis suggests around 2.5 times higher?
2.5 times, just because of where we are.
Largely, yes. Logistics are expensive.
So it's not just labor costs, it's energy, it's the tyranny of distance, as they say. How does this collection of high costs affect our international competitiveness overall?
Well, these higher costs make it very challenging for Australian manufacturers to compete with producers in countries with lower operating expenses. That's often why you see manufacturing moving offshore.
Right.
It also makes it more difficult for Australian exports, other than our raw commodities, where prices often set globally, to be price competitive in global markets. And that hinders our ability to diversify our export base beyond resources.
Okay, so to sort of wrap this all up, this analysis paints a picture of an Australian economy where a small number of very large companies hold significant sway across major industries.
Yeah, that's the core argument.
And this situation seems to be reinforced by regulations that can, maybe unintentionally, create hurdles for new competitors, all happening within the context of a relatively small, geographically remote market.
Correct.
And then layered on top of that is this reliance on a few key export sectors, mainly resources, and a less vibrant innovation ecosystem compared to some other countries. And finally, a high cost base, making global competition tough in many areas. It's quite a complex interplay of factors.
That's a very accurate and concise summary of the analysis, yes. The central argument isn't just that this dominance exists, but that it's amplified and sustained by this combination of interconnected factors. Factors that, in turn, can limit competition and, well, entrepreneurial dynamism.
Right. So for you tuning in, if you're trying to get a solid understanding of the Australian economic landscape, this deep dive really highlights the importance of looking beyond just the headline GDP numbers or unemployment figures. This concentration of power in a few key players seems to have pretty significant ramifications for everything from the prices you pay every day to the long-term trajectory and maybe the resilience of the national economy.
Which leads us to a crucial point for you to think about. What are the potential long-term consequences of this kind of economic structure? For Australia's future prosperity, its ability to adapt in a, rapidly changing global landscape, and what possible shifts or policy adjustments might be needed if the goal is to encourage greater competition and more innovation. It's worth reflecting on which of these factors, the oligopolies, the small market size, the regulations, the export reliance, resonates most with your own experience.
Yeah, as a consumer, or maybe as someone working within the Australian economy. Which bit feels most real to you?
Exactly. It's definitely food for thought.